Please subscribe, like, and hit that notification bell. Thanks, guys. That's it. We're live, guys. Guys, we have a treat. I have Justin Smythe, next big trade. Happy to have him on board. I've had him on my Bad Charts YouTube channel a while back. We've had him a few times on our YouTube channel, guys. And he is the maestro of stage analysis, Stan Weinstein's stage analysis, secret for profiting in bull and bear markets. He's the reference. He's been doing it forever. So, Justin, welcome back, man. Can't wait to see what you have to show us through the your little box there of goodies.
Yeah, thanks, Patrick and Kevin. Yeah, we've had, definitely some good discussions over the last couple of years. And I think we're approaching an interesting time in the markets currently. So it's good to kind of go over what's going on across a bunch of different markets. And if you're familiar with stage analysis, I think some of the stuff I'll talk about is going to make sense. If you're not familiar with it, basically stage analysis is a simple trend following system, uses the 30-week moving average to determine what stage a market is in. And basically, we're interested in being long markets that are in stage two, specifically when they're breaking out of a stage one base, where they're breaking out again out of a consolidation pattern into another stage two breakout. And then we want to avoid being long markets that are going down in stage four, or even a market that's just going sideways in stage three or stage one, that's not really doing anything, and you're kind of just leaving your capital not moving at all because the market's not going anywhere. So well, let's just start out with the S&P 500. And you can see on my color coded chart here that basically, obviously 2022 was a negative year for the market. We had a stage four downtrend, which is the pink square on the chart, and we were in a stage three topping process before that. And then towards the end of 2022, we started getting more into a stage one basing pattern where the market started going more sideways instead of going down. And then there was a failed breakout in around the February timeframe where the market tried to break out but came back in. And then in May, we finally got a real breakout. You can see like the volume thrust. Well, that actually occurred in March, but I mean, there was a little bit more volume on the breakout in May as well. And then the S&P 500 has been in a stage two uptrend since around the May timeframe, and we just came out of our first correction in the new stage two uptrend that we've been in for a few months. Just this week, I think we might be coming out of this correction finally. So this is an interesting time to look at the market again, because after a month-long correction, there seems to be more activity in the market again. And we're also coming into that time frame. If you're familiar with the stock market, they always say like sell in May, come back after Labor Day. Obviously, Labor Day is next week. So, September is historically kind of a negative month for the market, but we are also coming out of a correction as well. So that's, kind of where the S&P 500 is at right now. So you guys have any thoughts on this chart?
That's interesting stuff. That, I mean, it also ties in a little bit with precious metals. I think Patrick often calls silver a recovery metal, and for the gold and silver bulls listening to this, watching the S&P avoid a complete meltdown is a good thing. So seeing the stock markets not going into a complete total meltdown, as some people are expecting imminently, is a good thing for precious metals as well. But yeah, I mean, it did look quite nasty there for a while, didn't it, for the stock market? Maybe that sort of decline is pushed out further into the future. I don't know if you've got any particular thoughts on whether we're likely to make new all-time highs there on the S&P. I think that's probably the question people are thinking about. Yeah, so it's recovering and it's getting close to those previous highs there.
Yeah, I don't think it's surprising to see the S&P 500. This first pullback happened where there was some previous resistance back in late 2021 and early 2022. So I think price is kind of respecting a former resistance area. But overall, I mean, I look at the structure of a market in like the current time frame, I think, is the most important, instead of trying to forecast like what do I think is going to happen. Well, the structure of the S&P 500 right now is in an uptrend, and we just had a pullback within that uptrend. So one of the things to look at when you have a pullback is what happens afterward. Are we seeing more stocks starting to break out again? Is there more leading sectors breaking out? If that happens, then the market has a better chance of resuming that uptrend. But if after a pullback there's really nothing emerging again, that's a bad sign that the market's going to probably continue to move lower, because nothing's really erupting again as the market starts to firm up again. So I think yesterday, we're talking on August 30th. Yesterday, there was all of a sudden a lot of volume in the market when the US dollar actually made an important move lower, and we're seeing a little bit of follow through today. So we've kind of had a dull period for about a month, but with the comeback after Labor Day type of stuff, like if the market, more volume comes back into the market, I think we might start to see more trends emerge again. But turning to silver, though, that's an interesting point you made about all these markets compete for capital. So, sometimes precious metals can do really well when the stock market is going down, but the stock market's not always going down. So the question is, when the stock market's going up, I think you want to be in precious metals when they're actually outperforming the S&P 500. And that's actually something that I've been watching with silver recently as well, as you've got silver approaching, resistance again, and it doesn't have a lot of overhead resistance if it can break out from the current price level. So if you get above those price levels, all of a sudden silver's trading with minimal resistance, and it doesn't take a lot of volume to move the silver market as well. So I'm watching the volume as well. If we get a big volume surge to push silver above all of its resistance, then it could be a leader, even if the stock market's rising with it.
Interesting you mentioned the volume there, because I've noticed very often that the volume, when you get a peak in volume there, it often occurs either at the top or the bottom of a multi-month or even multi-year move. So seeing a large peak in the volume always draws my attention to sort of ask whether it's a top or whether it's actually a bottom, and they do tend to line up quite well with extremes in the market.
For sure. And actually, that's volume. You need to look at volume in combination with price. Like what happened when the volume spiked. Like if you look at the silver chart here, going back to early 2021, you had a breakout where there was a lot of attention on silver. I think the silver squeeze was attempting to be going on, and the market broke out above resistance, but then it closed back below resistance. And really it shows that sellers controlled that session for the week. And the market was never able to regain that resistance level. It tried to attempt to break out again later in 2021, but the volume never came in. And then silver actually went into a stage 4 downtrend for most of the time frame from 2021 to early 2023. There was another failed breakout attempt in 2022, but then the market went lower again. So now, if you look at the right-hand side of this chart, we're at like a critical consolidation period where silver is going to make a decision whether it's going to break out above this resistance or whether it's going to maybe fail a breakout and just come back in again. So we got to see what happens here. But you're seeing the price action kind of start to collapse a little bit, get a little bit more condensed in one little area. And then what I told my subscribers actually recently too in my newsletter was that what was interesting with silver was that it didn't make a lower low over the past couple of weeks where the US dollar made a higher high. So it's showing a lot of relative strength all of a sudden when the dollar was actually trying to break out of a little bit of a range. So I think that those are the type of little nuances that sometimes if you get like a failed breakdown and then all of a sudden things switch and the volume comes in, the market all of a sudden breaks out, catches everybody off guard.
Yeah, it's interesting you mentioned the relative strength there, because I noticed that the US dollar index, or I suppose the dollar euro pair, the euro dollar pair, had DXY had moved up from around about 101.5 to around about 103. And whilst it had risen, gold had also risen about $80 during that period as well. So gold has been showing some good relative strength against a relatively strong dollar versus the euro. So that's interesting to note. So any kind of downward movement for the US dollar index, weakening of the US dollar versus the euro, does act as a tailwind for precious metals. It makes it easier for them to push higher. I think anyway, that's not my personal view.
Yeah, I think so. That's true. And I think one of the things that happened last week in particular was that platinum finally moved higher, gold moved higher, silver moved higher, and then the US dollar also moved higher last week. So the precious metals all of a sudden woke up, even though the dollar was making a higher high after a 6-week rally. So that, but the dollar rally, if you look at the UUP, which is like the bullish US dollar fund, the volume on this thing has been non-existent during this rally, even though, like, if you look at 2022 when it was in a stage 2 uptrend, there was lots of volume there. It seemed like there was more people, more institutions were bullish the dollar with more exposure, whereas now, at least in this fund, there's virtually no activity, even though the dollar was breaking out. So that's kind of a red flag to me too, that this dollar move was potentially just a safe haven from stocks versus like a real move in the US dollar. So I think, like, if you combine this with the strength in metals, all of a sudden metals don't break down, the dollar does break out. The metals are showing you that they're showing a lot of internal strength. But the question now is, do they have enough power to because they're competing with the stock market. The stock market's still in an uptrend. So can the metals gain enough attention to outperform the stock market? I think silver in particular looks good just because of the overhead resistance. Like, there's, once silver clears that, if a lot of the market sees that, silver's all of a sudden, because silver's such a small market, silver could go up like $20 and nobody would care. So that's what's interesting about silver. But the mining stocks really aren't, you don't see the volume there still, even the mining stocks, even though the metals are acting pretty well. So that's interesting too. It's like, I think the market,
precious metals mining investors, it's a tough sell, isn't it? To be honest, they're so unloved, the miners. It's that you look back historically, and there are small windows of opportunity with the miners where they outperform the metal. But to be perfectly honest, those periods are pretty short, and they don't tend to last very long. And over a longer period of time, the miners have just performed terribly versus metals.
I think one of the problems really right now is that the market seems to like these crypto miners a lot more than they do the gold and silver miners. If you look at the volume that comes into the crypto miners, when Bitcoin starts to act well, I mean, the crypto miners were taking huge volume earlier this summer when they broke out. And we just haven't seen that yet in the precious metals miners. There's a couple of precious metals miners that are looking pretty decent, but as a group, I think the crypto miners are acting more like really what you want to see when you're trading is a sector move where most stocks are doing the same thing. And you're starting to see that more with the crypto miners than you do with the precious metals miners. I mean, that could change if silver does erupt here, but that's just kind of what's going on right now.
But those miners, Justin, they just share the name miners. They have nothing to do with one another, right? We say miners, Bitcoin miners, but what is that? They're not mining anything. They're
Here we go. You sounded like an old dinosaur there, Pat.
well, it's just because I know but those words they're both miners, but they're not.
They're not mining anything physical. They're mining.
One of them's crunching numbers, and the other one's actually digging stuff out of the ground.
That's true.
Sorry, it's too just
alienated.
The terminology there is a little bit weird, but ultimately they make more money when Bitcoin goes up, so they're tied.
Okay, just tied to Bitcoin.
Yeah, just like gold miners are tied to gold. So when it's like it's almost like night and day when these type of assets switch. It's like all of a sudden gold's in an uptrend, gold miners start going up, silver miners start going up. When Bitcoin's in an uptrend, these crypto, stocks are leveraged to crypto. So they love to see crypto going up.
Yeah.
So yeah, I think yeah, as an investor right now, what's interesting about the market is we're starting to see more things going up at the same time. So the question is, what's going to outperform? Another thing that I've been watching all year and like talking about in my newsletter is obviously the artificial intelligence stuff. That's been on the headlines everywhere, and there's been tons of leading stocks in that space as well. Nvidia, obviously, people, there's lots of Nvidia bears, but Nvidia is a leading stock in the market right now too. And Nvidia is already making new highs. If we're coming out of a stock market correction, anything that's making a new high immediately after you come out of a correction in the S&P 500 is typically a leading stock, and Nvidia is doing just that. Plus, there's volume coming into it too. So, I think artificial intelligence and semiconductors are two leading sectors as well. And if you look at this chart, I mean, Nvidia has been leading the market all year. If you look at right in early 2023, it broke out into stage 2, and it's been in stage 2 ever since.
A pretty impressive chart, that, isn't it?
Yeah, so it's a lot different market than 2022. There's more things going up this year. I think we talked before we started the recording, but uranium obviously is breaking out of the base as well. The one thing I don't like about uranium is again the volume. Even though like Kamiko's well within an uptrend now, it just when it broke out, it didn't have like the monster volume that I typically look for on a breakout, but you definitely have a stage 2 uptrend here. So
I remember the Stan Weinstein book. The volume it wasn't about a nominal value. He said twice the average of the previous 4 weeks. But if you zoom in on that breakout candle there, that one to the left, 2 to the left, maybe that's about twice the average of the previous 3-4 weeks.
Yeah,
that's enough.
It's pretty good volume. Yeah, it's just like sometimes if you look at back in early 2022, you had a little bit more volume.
But give it time, Justin. That we got to keep the volume for the blow off top. We can't waste it all at the beginning.
That's true. And again, I almost think that the way that Wall Street, I think, seems to work now is they don't like to touch anything resource related with a lot of these institutions. So the retail investor can almost get into these markets sometimes without competition from institutions. Are still focused on tech. I think like just looking at the volume, if you look at the oil and gas has been mostly in an uptrend over the last 2 or 3 years, but you barely see huge breakouts on massive volume in any of these stocks, because I feel like the institutions are almost look at this like they don't want to be heavily involved in a sector like this, even though it's in a longer term uptrend. So I think again, like if you're a retail investor, you have to look at it. You could have exposure to these different markets and be fine, but you really do want to find what's outperforming. And I think in my analysis, I think artificial intelligence still seems like a leading sector. I think silver and Bitcoin are kind of competing against each other. But silver looks pretty good again if the volume starts to come in. And then you got uranium sitting there, breaks out, kind of, not many people are looking at it too. So there's another market that's in a new uptrend right now.
Yes. And no narratives attached. That's what I like, Justin. Like there's nobody's talking about uranium. I love nothing, right? Well, maybe people are, but I'm not. It's not at the like it's when I hear that silver squeeze stuff, I hate it. Not the way I hate it, but if I'm in an uptrend and then silver squeeze and everybody gets enthralled, for me, I look at the chart really closely and I'm looking for weakness, because that's usually what it is, right? When there's a mass euphoria, you're close to the top, or at least some type of intermediate top. It's like And
Yeah,
now
for sure. You're
uranium, like,
totally right.
yeah,
Yeah, I think whenever, especially when something goes mainstream that you've never seen it go mainstream before, that's like a huge red flag because that means like everybody's focused on it. I think the artificial intelligence stuff had some of that this year where when it started breaking out, nobody was talking about it. And then in the summer, it was a huge buzzword. And then all of a sudden, you had a huge correction in all those stocks. And now, so the people that bought in late are then, sitting on 20-30% losses all of a sudden. Uh, and they just got that's what always happens in markets. People get suckered in at the wrong time because they listen to headlines and they don't, look at the charts carefully.
right. Headlines always come after the price. Price has to go up for the headlines to talk about it. It's just so much common sense. Or down, capitulation bottoms. Oh, red day on the Dow, minus 800 points. Well, then you have to start looking for a bottom when that happens, right? It doesn't mean it's the bottom, but you could be getting close to it. And that's why hopefully people, they sign up to your subscription or they sign up to ours, but at least somebody should have chart trading in their arsenal and their tool set as an investor. Please, guys. Jesus, I can't. It's hard, I want to be I want to be a zealot for charts, to promote them because they're objective and unbiased, right?
Exactly. Yeah. And I mean, I think some people just don't like looking at charts. But yeah, you're gonna get the chart's never gonna lie to you. The people that are talking about things on the internet or in magazine. I mean, a magazine or a book is one of the worst places to look for investment advice because by the time it's actually thought about, written, and printed, it is so far over, it's ridiculous. Like, I mean, never take an investment advice from a book because you're probably like 2 years late versus at least somebody on the internet is going to be somewhat close to like where, you know, or to the current market. But if a book can be so far, once a book is written, it's over.
They're at the next cycle. Maybe if you're lucky, the book's so late to get released that you're catching the next one, the next stage 2 uptrend.
Exactly.
It's true, right? It's right what he says, Justin. It's that information, the stage 2 breakout on a weekly chart. It happens in 1 week.
Honestly, here's a great exercise. If any of your listeners want to do this, go look at when books were printed, and then go look at the charts at that time frame. And I swear I've done this before. Like you'll see, like I think when Jim Rogers' book Hot Commodities came out, it was like right at the top of commodities, like in the 2000 to 2010 time frame. Or I think he had a book that was bullish on China too, and that came out right when China went into a massive top as well. I mean, he might have been right.
It's very backwards looking, isn't it? It's very easy to talk about these things with hindsight, but identifying a breakout in a market like the uranium market a couple of years ago, you can only do that in real time with technical charts. If you don't have the charts, you don't have the evidence. You don't know where the moving average is. You don't know where the breakout line is. You're not observing the volume. You're not tracking its ratio versus the S&P, for example, or whatever. Then your evidence is out of date. It's old information. So, you first thing is that you have to be dealing with current information. Second thing is if you haven't got a chart in front of you, then really you're just weighing up people's views and opinions. Some people are better at doing that than others. Some people are better at sifting out the good news stories, the bad news stories, and filtering out what's true and what isn't. But there's a lot of bias involved in that. If you're trying to sort of work through people's views and opinions, they all come with an element of bias. You don't know what their bias is. I don't know. You don't know. Nobody knows. Put it on a chart, all that bias just disappears. It's gone completely, vanished. It's like woof, bias is gone. So that's what I love about technical charts. As you said a moment ago, Justin, they don't lie to you. They can't lie to you. You can only misinterpret them, and you can minimize the chances of misinterpreting them by using, multiple pieces of evidence, weight of evidence analysis. Don't just look at one thing. You got the volume on there. Okay, well that's useful, but you wouldn't trade just based on the volume. You've got other indicators in your indicator panel underneath. You've got the moving averages. What support and resistance is, and all of this kind of stuff. You bring in all of the evidence, because if you're trying to diagnose what's going on and you're not looking at all of the evidence, then you could be missing that key part. It's about that weight of evidence, I think. Bring it all together and then make an informed decision.
Yeah, I couldn't
Rant
agree
over.
more. I mean, Stan Weinstein talks about the more charts that you see that line up at the same time, that's where you want to strike, because the weight of the evidence is getting the percentage odds of success or doing the right thing are increasing, because you're seeing more and more evidence leading you to the right conclusion. So it's almost like a case in like a crime or something. The more evidence you can build up that gives you the right conclusion, you're just increasing your odds of success. You're not trading as a probability game. You're never going to be 100%. There's no amount of evidence that makes things 100%, but
Correct.
sometimes your odds are going to be slanted above 50%.
Yeah.
Because there's more evidence there, and that's where you want to strike, because that's how a casino makes money. When the odds are better than 50%, then you want to be getting more exposed to the market.
Right, and a good example of that is if you're wanting to invest in a precious metal miner, perhaps a micro cap miner, something with just a few $1 million market cap, for example. The chances of that doing well are far, far lower. Even if it's starting to break out into an uptrend, the chances of that doing well over the coming few weeks or months is far, far lower if the sector itself hasn't broken out. If GDX hasn't broken out, HUI, GDXJ, SIL, SILJ, if they none of them have broken out, then even though your individual stock is breaking out, the probabilities are that it's going to roll over and do what the rest of the market is doing.
Exactly. Looking for group confirmation is critical. I always look for that. If you see, you're exactly right. You see one stock in a group breaking out, that's usually not a good, especially with something like precious metals or crypto, where it all tends to move together. So if it's all not moving together, that's a huge red flag.
Yeah. And I think quite a lot of people have discovered these red flags over the last 2.5, 3 years in precious metals. But there you go.
Well, when people are the most beat up is typically when the best opportunities arise too. So that's why you got to keep, always, if you misinterpreted the last cycle, well, another one's going to come along. So just, especially when most people are taken off guard. So I think that's why the silver recent move was interesting to me. It was because you're coming out of a larger correction and you've got a huge sideways period too still. So, I mean, once that gets above the resistance, all bets are off. Who knows what's going to happen, but that's where you want to be involved.
What's your level? Do you have a number for that horizontal resistance level that's really going to get you more excited for the probabilities of a sustained stage 2 uptrend for silver? That's SLV, guys, by the way, right?
This is SLV. I tend to look at the ETFs a lot, but if you look at like the silver price, I mean, if you get above 26, you've cleared out most of the resistance from 2022 and earlier. And then if you get above just 28, then you're above any other resistance. And then you got to go back. I don't really count resistance past 2 years. So silver goes up like 10 or 15%. All of a sudden it's got no resistance. And again, it's a small market. So it doesn't matter if it's not like it's Apple or a huge stock that takes a ton of institutions to start moving it. If a decent amount of money comes into silver, then it can go up a lot, regardless of what else is happening in the market. So I think what happened in 2020 is interesting because it really erupted on massive volume. I think caught everyone off guard. Big move, and then it's taken a long time to really consolidate that move, and it just didn't have enough power to continue to move in 2021. So now people are kind of worn out, but you still have the same structure there where you don't have a lot of resistance to overcome if it does break out here.
Yes, emotional capital.
I was just going to say, a lot of people are waiting, sort of bated breath, waiting for silver to break out. So when it does happen, I'm sure it'll get a lot of attention.
Yeah, one of the problems over the last, I mean, the US dollar has been dominant for about like 9 years now, right? So the question is, if we get into another cycle where foreign currencies start outperforming again, and silver's in a position like this, I mean, yeah, like that's probably the time period where you're finally going to see some outperformance. So I always look at the performance against the S&P 500 because, again, it's competing against that right now because they're both trying to break out here. But yeah, the markets are always changing too. Like, just because something happened over the last 10 years doesn't mean it's going to continue. A lot of times that means that, things are about to change dramatically. So that's why that's why I like stage analysis, because stage analysis allows you to analyze any market objectively from a price and volume perspective, and it doesn't give you any type of fundamental bias. That fundamentals are really what can separate you so far from price that you're totally wrong, but you don't even know it because you have this fundamental bias.
If I put that on Twitter, Justin, I get all the trolls. I try to do some memes sometimes. Fundamentals, it's like complicated railways, and chart trading is just one singular railway, so clean, so easy. And people get upset at me because it's like, it's not the way they've been. Like, nobody teaches chart trading, right, in school. I don't know any school where they ever showed us about chart trading, right? Like, do they teach that in the States? Probably not, right?
Like, I mean, I think more people are using technical analysis, but the problem is everyone always wants to find a reason behind something happening. Whereas if you can give up the need to find a reason, I mean, Jesse Livermore, if you read Reminiscences of a Stock Operator, literally the first page in the book, he says, I don't care why prices did what they did. I don't care. Right. Like, I just want to know what they're doing. I don't care why they're doing what they're doing.
Right.
Totally agree 100%. And I've made that point over and over again on social media there. You can waste so much of your time trying to figure out why something's happening. It doesn't matter. Who cares? It makes no difference. You don't trade reasons. You don't trade ideas, or you shouldn't be trading opinions and views and any kind of those fairy stories. You just trade the breakdowns, the breakouts, you trade the stage analysis, you use your trading tools. And why waste time thinking, it's broken down? Okay, step aside. Case in point, Bitcoin. Okay, the fundamental story for Bitcoin, that hasn't changed. The use case and all of the reasons why Bitcoin is going to take over the world, and the future is Bitcoin. Well, that hasn't changed. And but what happened? Okay, well, from at 69,000, it had that fundamental reason why it was going to do great, but then it fell by 75% or whatever it was. Didn't stop it having that 75% drop. If people had used technical analysis, they would have stepped aside. They would have rotated into something else. It could even have been fiat, for example. Much as I hate to say it, you could have just stepped aside and moved into a cash position. But you do not always have to be invested in the markets. If you did that, you would be able to exit at a higher level, enter at a lower level, wait for Bitcoin to break out into a new uptrend, which your chart there is suggesting it's trying to do at the moment. But we all know the halving is coming up in whatever it is, April next year, and that's traditionally a very good time to take a position. So you can use historical evidence in combination with technical chart evidence. Avoid all of the narratives, because the narratives are not always right. Who knows? Bitcoin might not even exist in 10 years' time. And I'm going to have a load.
Then how dare you say that? This video, it's going to be the title. Kevin Wadsworth says Bitcoin does not exist. We're going to get 100,000 views, and all the
gold. I'll balance it out, and I'll say gold could go to $500. Okay, it's a non-zero possibility. And my view is that it's incredibly unlikely because of the cost of mining the stuff out of the ground, and the fact that gold does have physical uses, and silver as well. So there's all of that background to it, and there's lots of reasons why gold and silver and physical things can't go to that sort of level. But anyway, that's fundamentals as well. Just put all that to the back of your mind and trade the chart.
Yes. Hey, Justin, okay, let's cover Bitcoin now, because for me, the stage 2 uptrend, it's dead, right? It's done, or how are you calling this?
I think it tried to break out into stage 2 back in March, and again tried to follow through in June, but it's still having trouble. I mean, it's kind of moving more into stage 3 right now, where it had a little bit of a breakdown, but I mean, you do have overhead resistance still from early 2022, so you're still kind of fighting through that whenever it tries to break out. Um, the one thing that I do like about this sector again is the volume that's been coming into the crypto stocks has been really good. So that tells me that institutions are interested in this sector. Um, but yeah, there's some resistance there still. Like I like silver better from a resistance perspective. The fact that it can get above that resistance level and have no overhead resistance. I think Bitcoin's still going to have to fight through all of that, all these bag holders from, I don't know how many are left from like 50,000 and above, but there's probably still tons of them. So Bitcoin might need a couple more years to really get through all this resistance.
Wow. That's the title of the podcast.
So, but it's interesting the way I feel like Bitcoin and gold and silver are always they alternate competing with each other. That's kind of what I observed is I think in 2019 it was gold and silver broke out. Well, that was when Bitcoin was still consolidating its 2017 run, right?
Right. And Bitcoin broke out exactly when gold and silver topped. And that's when Bitcoin broke out. Once it was bonkers. But I'll tell you one thing. I look back at the Bitcoin 2009 chart, like the all-time history index. When silver broke out in 2010, you remember, like after the GFC, and then silver went bonkers from let's say mid 2009, I don't know, all the way to 2011. It went hand in hand with Bitcoin going bonkers. They both went bonkers together.
Right.
So there's a case for both of them going bonkers. Yeah. But recently, you're right. Recently, it's either gold or silver break out, Bitcoin goes sideways, and once gold and silver are done their move, then Bitcoin has a chance of doing its thing. But
yeah, and I think here's a good lesson for investors too. Like, don't ever assume all these relationships always change, and don't ever assume something can't happen if something else is happening. Like if Bitcoin's going up, don't assume that gold can't go up. If the stock market's going up, don't assume that silver can't go up. Because these relationships, nothing is fixed in the stock market. Things can happen simultaneously, and they can happen inversely related to each other. So
yes,
gold and silver does have a tendency to go up when the stock market is down in some cases, but there's no fixed relationship there.
That's right. Silver's best performance is going up with the stock market. Its best performance, you overlay those charts, it's going up with SPX. It's just outperforming SPX. And I think that's the lesson is, while two instruments are going up, you want to go in the one that's outperforming the other one, right?
Yeah, that's exactly right. Look at the relative performance. Whenever you see silver outperforming the S&P 500, I think it's an easy, like, I want to have some exposure to silver if it's outperforming the S&P 500.
That's another point with Bitcoin, actually, because Bitcoin, or perhaps I should say, Bitcoin versus gold, for example, or Bitcoin versus silver, or Bitcoin versus the S&P, or even Bitcoin versus inflation. Bitcoin is in a position at the moment and I've made this point on social media as well, Bitcoin's in a position that it hasn't found itself before, in that it's broken down against all of those things. It's made a key breakdown versus gold, silver, the stock market. And okay, that's not to say that breakdown can't be reversed. Of course it can, but it's quite a clear, very long trend line that that Bitcoin has actually broken down below. So it's in a technical position that it hasn't been before, which it's an interesting point to note. It's another reason to be continue to be cautious until Bitcoin clears those levels. I mean, that sort of 31 to 35,000 horizontal zone is clearly very, very key to Bitcoin's future. So until it can clearly punch through the 31 to 35 level, then for me anyway, because of what I just explained there, I've got to remain very cautious on Bitcoin and aware of the fact that further downside could well take over at any point.
Yeah, and I still think it's, if you look at the way markets tend to behave, the last leader is almost never the new leader. So Bitcoin is still just a couple years out from being the monster leader of like 2021. So that's still kind of early. Artificial intelligence took the market by storm this year. That wasn't a leader in the last 5 years. So it's a new thing. People always like the new thing. So I think we're still need more time for these bag holders to get out of Bitcoin. But yeah, like something like silver hasn't been a leader since like 2011 almost. I mean, it broke out, made a massive run back then. It's been like 12 years since people were captivated by that market.
And commodities versus stocks tend to move in a kind of cyclical pattern. And if you look at the commodities versus stocks at the moment, they're pretty close to historic lows. So and starting to break out to the upside as well. So if there's ever a time for the commodities sector to kind of have its time in the light versus the stock market, then the coming few years should sort of fit that bill. There's no guarantee that that's going to continue to be the case, but of course some commodities have already been outperforming the stock market for a little while now. So that process, and particularly when you look at things like the Bloomberg Commodity Index, for example, or the Deutsche Bank Commodity Index, they have had some very, very strong moves over the last few years, and they've just finished or appear to be finishing a consolidation period and starting a new move to the upside. So all of that feeds into possible future inflation as well. So all of this stuff is interlinked. But yeah, there you go. You got your commodities index there, a very long basing period with a sort of final kind of capitulation there in March of 2020, coinciding with the COVID outbreak or panic or whatever you want to call it. But yeah, a strong move up and a consolidation period that could very well be drawing to a conclusion at this point. It seems to be sort of breaking out and back testing that breakout quite possibly. But multiple commodities indices are showing signs of a renewed upside move.
Yeah, this is a perfect example too of looking at price versus what people are saying. A lot of people were concerned about inflation 2022, but price was having trouble after it made this blow off top. It really needed to consolidate, and now you've got probably less people worried about inflation, but you've got a basing pattern here that it could break out from. And you're right, you have individual commodities in certain cases like uranium acting well. So I think you just can't ever again, those relationships, they're never fixed. So you've got uranium's in a bullish phase right now. Other commodities are not really that way, but the markets always are changing. You need to understand what is price doing right now, and if you can line up the weight of the evidence right now to be in your favor, then you can make good trades because you're getting in sync with the market. So obviously nothing goes up straight in an uptrend all the time. So you have to be mindful that things take a while to consolidate, especially huge moves lower or higher in either direction. Those are the moves that tend to suck people in at the wrong time. They become a bag holder, and then they miss the next cycle on something else because they're fixated on Bitcoin or something.
And something else that's going to feed into possible inflationary pressures over the next couple of years is energy costs. And haven't looked closely in the United States, but right across Europe and here in the United Kingdom, baseload energy costs, that's power grid, electric and gas costs, have fallen a long way from their highs a year or so ago, but they have actually based at the upper level of the previous historic range. So you've had a historic range for baseload power prices, and the price has come all the way back down. It's tested the top boundary layer of that previous range. So historically, if you go back more than 2 or 3 years, the price has just come back to the upper limit of that range, and it's actually bounced off of that limit and has broken out. Germany in particular, very interesting looking at their baseload power and energy costs, because they're breaking out once more. Nobody's talking about it. Nobody's really even noticing this, but a bullish descending wedge breakout, getting back above key moving averages, that's happening right now. And that is something that's just giving a little bit of an early, there's no guarantee, it's no guarantee it's going to go, suddenly start taking off to the upside in a dramatic fashion, but it is giving an early warning, an early indication that things might not be as they seem. The story might not be quite as simple as people think it is, and inflation may well not be done with us yet. So
Mhm.
something that, again, something that you can glean from the charts, that fundamental discussions, and if you just listen to talking heads, you probably wouldn't be picking that up. But the technical chart analysis is making that very clear.
You're depressing me, Kevin. We can't close it like that. We have to let
Shall I-
Justin tell
Well,
us
if you
something
actually, I'll
positive.
turn that into a trade. Keep an eye on the EV sector, because you've got like a stock like Rivian that's coming out of a base on volume, or if the EV sector heats up because people don't want to spend a lot of money on gas cars, then you could have a trade that works in your favor because they're breaking out into stage 2. So, those are the type of things where you can take something that's happening in the world, and obviously the market's paying attention to it, and all of a sudden a bunch of auto stocks start breaking out because everybody wants EV cars or something like that.
Right. But the charts, right? The charts have to be breaking out, right? So even if you love the EV story, if the timing is wrong,
exactly. Yeah, the charts are always what you go to for the trading. I mean, don't listen to the fundamentals, don't read books and trade off books for sure. Like that's a good lesson from this interview too.
That's great. Hey, Justin, we did like an hour. That was awesome. That's it. Please tell everybody there where could they find all your material there.
Yeah, I've been on nextbigtrade.com for over 12 years now. And I also have a premium newsletter, premium.nextbigtrade.com. That comes out on a weekly basis. I'm also on Twitter, at nextbigtrade is my handle. So those are 3 good places to find me. And I'm pretty much on Twitter every day. So if you like following people that talk about stocks, you might want to follow, or if you want to learn about stage analysis, that's like my main method for looking at the markets.
Beautiful. I'll put all the links in the description. It's always fun catching up, and hopefully maybe next time we talk, silver will be in a stage 2 uptrend there, and we'll be talking, and the price will be like at $35, $50, $1,000, guys, right? I have to put in a big buzzword so I could put in the title.
Yeah, keep an eye on it right now, because it might break out soon. You gotta, whenever you're looking for breakouts, just have an open mind. If it gets above there, see what starts happening. See what the
we might have to do better than Justin thinks silver might break out. I think Patrick can convert that to Justin says silver to $100.
I don't know. It was fun. Always fun looking at a stage analysis. Sometimes I haven't done it in a while, and this is an occasion to see somebody there who does it masterfully all the time there. It's cool.
Yeah, thanks.
Thanks for your time, Justin. We really appreciate it. Thanks.
Yes. Yeah, you too, for sure. Yeah.
All right, man.
All right.
Laters, guys.
All
right, take care. All right, see you guys.
Please subscribe, like, and hit that notification bell. Thanks, guys.